Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, let's continue our discussion of the gold market. As we have suggested, after the Trump inauguration, the activity on the market should become more interesting as the pressure and some excitement around this event will start to fade down, and right now market is returning back to the ordinary questions, ordinary concerns about some purely economical questions, so financial questions. One of the questions stands around the policy of the Donald Trump. So right now the major concern stands around measures that his administration will take because it's some blocks have been announced. I mean the news blocks, so this stimulus, some tax cutting, protection for domestic companies and so on. But currently this major question is whether this will be on the road of the industrial growth, economical growth, or it could turn to the spiral of the negative rates, interest rates, and just lead to inflation, because any tax cut, any stimulus will demand some spending, and whether they will able to keep the balance between the stimulus, tax cutting, and supporting of the real healthy economical growth, or it will turn to financial spiral and it will lead to real negative interest rates when at the first glance rates will be high, but inflation will be higher. And if you will calculate the difference between the rates, say on the United States Treasuries bonds and the real inflation rate, you will get the negative numbers. So that will not be the healthy economical growth rate. So that's the major concern right now that stands in among the investors. That's why, since the gold market is very sensitive to either, depending on what it will be, this will be economical growth, this will be the healthy interest rates, and the Fed Reserve will control the inflation and will press down the inflation by the rate hiking. That's the one story. That's not really good, very supportive to the gold market. But if it will be significant, some kind of the quantitative easing program, so lots of expenses, when inflation will come faster and the Fed will be on the step back on this inflation, that will be mostly supportive for the gold. And that's why currently it's not quite clear yet what's really is going on. That's why markets are very careful and they just trying to understand, trying to get the details, some hints and rumors on these subjects. Still, in the short-term perspective on the daily chart base, you can see some kind of the maybe not the reversal patterns forming, but the pattern that could lead market to retracement down. Because we, in the whole way of this rally, we said that this rally mostly is artificial because it has no support and real money inflows from the investors. Because ADF statistics CFTC shows that it's really not big purchases stand behind this rally. That's why, as usually it happens on the gold market, this could lead to the collapse or deep retracement on the gold market when the speculative activity will fade out. So as we said, the retracement that we expect here is 1162 area and 618 support of the most recent action, maybe even lower. So that's just the minimum level that we expect to get. But let's go step by step for this. So by this action, guys, and the picture reminds me also the John Napoli double repo sell picture, because we have the thrust up, retracement, move up and creating the new top and dropping down. So that's in fact the failure of the bulls to push market higher. If we'll take a look at the picture carefully, you could argue that we do not have the first close below the 3x3. That will be correct, because John Napoli demands after the rally first close below the 3x3, then above, and creating approximately the same high, and then second close below. That will be the confirmation candle for the double repo. That's why we probably can't call it as the pure double repo sell, but by the nature of the action, by the market mechanics, this is, guys, the double repo pattern. So maybe we could treat it as the double repo lookalike pattern. But except this moment that market hasn't shown the close below the 3x3 here, other picture stands very similar to the double repo pattern. Also, guys, take a look on the top. We have got side by side two bearish engulfing patterns, and distance between them is very small. So the consolidation of the double repo pattern is very small. That is should be treated as the positive sign of the double repo pattern. So we expect deep retracement not only because this could be double repo, but also because that's the first rally after the significant plunge down, and usually the market shows such sort of the action reversal. It usually shows deep retracement after that, so that's why we mostly expect 1162 support should be hit. On the intraday charts, what we have in the 4-hour time frame chart is very useful for us, the channel, and usually this kind of the indicators, I call it the channel as an indicator because mostly I use it not as the pattern, but in terms of the breakout of the borders of the channel. So what we have, market has failed to pass through the weekly pivot resistance. One drop below the weekly pivot point right now is dropping, but still, as you can see, the tendency of the high lows and high highs still alive here. Probably it will be destroyed very soon, but right now it hasn't happened yet. Here we have clear bearish divergence. The MACD trend has turned bearish on the 4-hour time frame chart. That's why we expect that this pattern will be completed and breakout could follow. Actually, guys, not too surprised that here you could easily recognize the double top pattern. So now the charts could be even seen much better. All the signs of the double top here stands in place. So you can see some minor Russian runes on the top of the second, on the high of the second top. It's also very typical for the double top pattern. What's more interesting is that if you will calculate the target of the double top, you will get 1180 area. That will be the first destination point on the way down. That will be the target of this double top pattern. So that's why if you're searching chance to go short on the gold market, you could take the closer view on the double top pattern and think about the using of this pattern in the trade. So, but be careful with the breakout with the neckline. It's very important moment. So it's better to not take position right in the mountain breakout. Usually it will be better to use some retracement here, taking the short, because here at least you have the gravitation area where market will try to reach is the neckline. But it's a question whether to break it or not, or whether the double top will work or not. But while the market will start to move lower to the neckline, 12 even 1185 area, you will get some room to move your stop to the break even if you will take the position somewhere on the slope of this pattern. It's just safer than trying to get position right in the moment of the breakout. So this will be a very volatile moment. That's why it's not really a good idea trying to take the orders on the breakout of the neckline. So that's what we see on the gold market. Watching for the double top. Finally, we've got the pattern that supports our idea of the deep retracement. Now this retracement should be started, and the first destination point is 1180. But in the larger picture, guys, we think that this swing could become the part of some greater pattern, maybe the butterfly, maybe something else. Because here, guys, we should, in the long-term analysis, we should get the pattern that will confirm or not confirm the reversal of the gold in the new bull trend. But this probably perspective will take much more time to watch for. Right now, let's focus on this pattern that has been formed here and its possible retracement down.